Today, you and I may not agree whether it was a bull day or a bear day, but two stocks only hit new highs, and on my tracker, a lot of them hit fresh lows. India VIX was high on 4th of June. It has steadily been going down. I interpret it as losing interest from retail. And selective stocks are now giving opportunities. Look at Bajaj Finance. If you leave market condition outside, it is a screaming buy right now. Today, Nifty, Bank Nifty both shot up like it was going to be a good short covering rally. But the injection came early around 10 o'clock. The markets fell. Nifty, Bank Nifty, both of them fell. And then they consolidated in a very, very narrow range. In today's Nugget, I'll talk about what mutual funds are doing. I'll use AMFI data, October and September. The data is from AMFI, the theory and analysis is mine. And also over the weekend, I'm intending to create a video on how to survive the FII onslaught, the huge sell-off that is happening right now. If you have any specific questions, leave them as comments. I'll try and address as much as I can. I expect to release a video somewhere on Saturday. Markets were a lot better today, lot many greens. The intensity of reds also came down. The problem was consumption, HUL, Tata Consumer, Britannia, Nestle, even BPCL to some extent is consumption only. This pack fell a lot. Consumption is turning scary. Reliance is back at the top, at least today, contributed max to Nifty going up, followed by HDFC Bank, Kotak, ICICI. Eicher Motors is in the green zone. That was up a lot today. That's another stock taking Nifty up. What was taking Nifty down? Adani Ports, Power Grid, ITC, NTPC and HUL. Look at the pressure of HUL, 85%. But that was well managed by Reliance today. Now if you are wondering why Reliance was up today suddenly, that is because Reliance Jio was included in the 45 stocks that were added to the FNO list. Reliance is a beneficiary because they hold significant stake. Next 50 was even better. The number of greens was higher than number of reds. Not a single deep red and a lot of deep greens. This is Jio Finance at the top. Now Zomato is a crazy story. They are raising new money, fresh money via QIP. They'll keep the money as an investment. The earnings from that investment will be shown as profit to offset losses, offset costs. So Zomato is not a food delivery company. It is no longer an IT company either. It is now an investment company. Borrow cheap money, invest in India, use it to partially run a loss-making business, pass on rest as profit. Investors are happy. Bajaj Holdings is getting crazier. This was a one-off quarter. I don't think their earnings will repeat. There will be bloodbath in this stock the way it has been going up. Next 50, the laggards today were ABB, Union Bank, Power Finance, REC and Adani Energy. The graph makes it looks like a bull day. However, the falls here were a lot steeper than the sectors that were going up. As of today, the max returns are coming from holding companies. That's primarily Bajaj Holdings. Hotels number 2, software is at number 3. Red, renewable energy, chemicals, coal, natural utilities. See this bunch of reds here. Overall 23 sectors up out of 36. Look at the dent being made by renewable energy compared to the profit from holding companies. This is why retail portfolios are in red. I talked about this yesterday. Nifty closed below the 200-day moving average. Today the injection came early. Nifty fell somewhere around 10-15. Bank Nifty went along with it. Reliance was immune to that fall. TCS also was doing okay, though it was a little down. But HDFC Bank fell, Airtel fell, ICICI, Infosys. HCL was doing great till now, but then that fell. ITC, HUL, SBI, the entire pack. Now there is one phenomena which I am observing. There is a line on most dashboards. The stocks above that line are doing well. The stocks below that line are sulking. In Bank Nifty, we have two reds, IndusInd, IDFC. IndusInd made a fresh low today. The top 3 banks are in the green zone. See this line? All reds below it. 5 new fresh lows. These are private sector banks. PSUs were doing very badly today. Most of them were in red. There are 5 red stocks in PSUs, not a single green. Investing came back strongly today. The stocks that went up were not what I thought, but Nuvama Wealth was up 6%. We still have greens and there is no red. NBFCs continue to bleed and I am surprised at the fall in PFC REC. The power projects are not going anywhere. These loans are taken by companies. The collateral is the power plant or the transmission grid. If they default, PFC REC will acquire those assets. These are not turning into NPAs. And power demand is going up in the country. We have not seen a single quarter of late, at least 4 or 5 years, in which power demand has gone down. And both PFC, REC are raising money internationally also now, which means their cost of money will go down, leading to higher profit. Microfinance continues to sulk. 5 companies made new lows. In IT, HCL and Swiggy made new highs, and both of them fell after that. Swiggy was down 6% in closing despite making a new high. Abundance of greens here. Swiggy probably will get there very soon. Auto had a better day. Eicher Motors is in the green. Ola continues to go down. Auto NCD did better than Auto today. Good gains in Motherson, Balkrishna, Apollo. So this sector did not like my commentary at all, and I hope that microfinance sector is also listening to my commentary and they decide to go up tomorrow. These gains were on good volumes today. Apollo 280%, Balkrishna plus 50%. Defense also was looking good today, encouraged by HAL's results. Solar Industries up 3%, Zen Technologies up 4%. This is comical. Reliance, the heavyweight, was up 1.2%, the sector was up, but the entire middle layer was red. The top players, NTPC and Power Grid, were red today, but the middle layer was doing well. Now, in my opinion, the sell-off in the renewable pack is overdone. Suzlon came back today, 5% up. Vari was also up a bit. If the anticipated sanctions in US do not happen, then this pack will go up for at least 10 days. Consumption was in a really bad shape today. ITC, Nestle, both were down a lot. So was Britannia and Tata Consumer. Nestle made a new low. Adani Wilmar was up 2%. United Breweries and Associated Alcohol, they went up. Non-edible pack was not any better. In fact, the biggest fall came from the large player HUL. Minor recoveries with Colgate, DMart and Asian Paints. Remaining pack was down. No support coming for HUL today. Now, India's trade deficit widens. I've been talking about it, that our imports are getting higher, exports are reducing. We need to do something about exports. Policy as well as action. HL results were good. Net profit jumps 22%. Share rise a little only. Now, Bitcoin is at 91,000 at the time of shooting this video. It touched 93,000. It was at 75,000 a week back on 8th of November. Gold 73,700, silver 88,000 nearly. Rupee made another low today, above 84.4 now, and Brent is still below 73. Watch for US stocks and Bitcoin both, because US is heading into holiday season. People will want to book profits before they get into that. My trades for the day, I only bought a little Fusion Finance. The results were today. In fact, they were not released by the time I started shooting the video. Today's nugget is about mutual funds. The first section is income debt oriented scheme. This is not equity. I'm just adding it to contrast. The inflow was 10,35,000 crore. The outflow was 11,50,000 crore. People are taking money out from debt funds. Growth or equity oriented schemes saw an inflow of 72,167 crore. That's in. Out was 37,747, leading to a net incoming inflow of 34,419 crore. Remember this number, roughly 35,000 crores. There are some hybrid schemes. The net inflow was around 5,000 crore. This became 40. Solution oriented schemes like retirement fund, children funds, a small paltry amount. This is the net spending we do on retirement funds and children funds. Dedicated themes. Now there are some other funds also, index funds, gold. The net inflow was 3,254 crores. The incoming was 30,000, outgoing was 26,000. These are big numbers. Overall, this seems like roughly a purse size of 40,000 crores for the month. This is September. October, the debt schemes saw net inflow 1,57,000 crores. The equity oriented schemes saw inflow higher, 42,000 crores. This was 35,000 approximately in the previous month. Hybrid schemes also saw net inflow 17,000 crores. Similar amount for solution oriented schemes. Other schemes 23,428 crores. This amount is roughly around 80,000-90,000 crores net. Now the biggest DIIs are LIC and SBI. What did they do with the money? In October, they deployed net 1,07,000. This was to counter FIIs selling 1,14,000. Now we all say FIIs sold, DIIs bought. But DII flow was not based upon FII inflows. People gave more money in that month. That is why it was deployed. So probably it is reverse. FIs are piggybacking on DI's net buy, not DIs buying what FIs are selling. September, whatever came in, 10,000 less. That was the net purchase. Maybe that was deployed in October. Now note one thing, that DII's net purchase and net sales number for the month are huge. Similar figures here. So DIs keep buying, selling stocks. November, half of it is gone. This number is smaller. Extrapolate it, it will come to roughly 50-60,000 crore net. Now what is happening? Let's extrapolate the scenarios. Markets will fall, markets will consolidate, and markets will rise. Public behavior: buy, stay where they are, which means don't take out money, don't add more also, or sell. Let's see what will happen in these scenarios quickly. If markets are falling and public is adding money, then what will happen is that the NAVs will go down or remain static. It is good for people, but people see NAVs. They will not see that they are acquiring more units at the same price or lower prices. So there will be panic, which can lead to exit or drying up our funds eventually. Even in case of stay, where people are not adding money, if markets are falling, they will see NAVs erode. That will take people to exit zone. I'll talk about this zone separately in the end. If markets are consolidating, people are adding money, then people will not see NAVs rise. That's because NAV is a function of stock prices. This will lead people to exiting eventually. Same thing with markets consolidating, people staying where they are. People see money not moving anywhere, not going up, not going down. They'll say, let's get out, move to another fund or to equity or to FD or something. If markets are consolidating and people are exiting, it will be similar to this scenario, which I'll talk about. If markets are rising, people add money, we are back to where we were for last 3-4 years. If markets are rising, people are staying, that will not happen. If markets go up, people will find money from somewhere, add it, and they will not exit for sure. People will exit when markets are falling, not when markets are rising. This is retail. Now this particular case, when markets are falling or consolidating and public exits, funds don't have too much money with them. Most of it is invested. That will put downward pressure and mutual funds will have to sell equity. And I believe mutual funds are preparing for this situation right now. Mutual funds are selling what will not be possible to sell when there is calamity, when markets are tanking. That is why you are seeing some of your not so good stocks fall a lot right now. See microfinance, for example. FIIs, DIs are exiting, especially DIs. They don't want to be in stocks that no one will be willing to buy, because FIIs in any case will be selling. If DIs want to sell, people have to buy. People will not buy C category or B category stocks. They will need A category stocks to get fresh money in. So DIs probably are preparing themselves for this possibility. It may or may not happen. The money that they are getting after selling, let's say A, they are adding small amount B every day to it and buying C, which is a good equity. That is why every day you are seeing a little sell, a little net addition, and a little higher buy. Now what is likely? First you will start seeing ads, more of them. Mutual funds sahi hai, we have seen them every day. And I am also saying mutual funds sahi hai after not investing in them for 15 years, mutual fund, ETF, whatever works for you. I've started investing in them a little. Markets fluctuate all the time. This will be ad you will see a lot when markets start going down. They're already going down right now. And I don't see too much of television, so this ad may already be flashing. Now ads will start making fun of people who are exiting. Tu pagal hai kya? Something like that, which will ridicule you if you are selling. Put moral pressure on you not to sell. And you'll see heads of asset management companies, influential people, people whom you know by name and face, both. They will start giving public statements. India story, growth, youth, everything good about the country. And I'm not saying that is wrong. They will try to create a positive aura that recovery is round the corner. It will come anytime. In any case, equity has always done well. Encourage you. Now, AMCs, their vested interest in getting net new money from you and also ensuring you don't take money out. They want both. Their heads have to talk positively. They can't give you a reality check that go out, book profits, avoid losses. That will make their companies sink. One more thing you'll see is FIs will be ridiculed. FIs don't have mouth, they only have hands and eyes and ears. They will take action, you may like it, you may not like it. Now some phenomena you will see, public will move some money to cash. Some people who are averse to risk, they may have done it already. Public will move some money to FDs. See, FD rates are going to go down eventually. People will get salaries in the next few months. They'll add money to equity later. If it goes up, that's fine, we'll catch the next bus. This is not a bad strategy, it's a smart strategy. In fact, I have done that in the last 1 year. I have moved money to gold, silver and FDs both. All three. Short-term redemption pressure on mutual fund if long-term investments approach zero returns. Suppose you put money in new fund at 10 NAV, it became 20. It starts going down. 18 you are okay, 16 you are okay. Suddenly at 15 you'll say only 50% left. I was at 100% gains. Should I redeem? At 14 you'll push the button. Move out. At least take what is available. Let's hope this does not happen. That will be doomsday. That is when A category stocks, the larger, ultra large ones, you will see them at lower circuit because mutual funds will have to throw them on the streets. You get 3-4 of these days in an entire decade, probably 2-3 times. Idea of this video was not to scare you, but to give a reality check. Hope this was useful. Have a nice relaxing long weekend. I will see you on Monday.